Welcome to the Interproperties Podcast, where we discuss real estate and more.
Welcome to Interproperties Podcast. My name is Konstantin Shelegeda, and I am the CEO and managing broker of Interproperties. Today with me is Nazariy Mryha, who has experience in investing in stocks and real estate. Today we will be talking about most interesting topic about investments. Investing in real estate versus investing in stocks. We have 10 questions which are placed here in front of us, and we will be pulling those cards out and read the questions and answer those. The questions will contain information about investing in stocks and real estate. So, Nazariy, tell me a couple of words about yourself, who you are, what you do, and what's your passion.
Sure. My name is Nazariy. I have a regular career. I work for Meta as a capacity engineer. I also have a strong passion in investing in real estate and stocks. So here today I can talk a little bit about two different views and personal experience in investing in both.
Awesome. So let's start with the questions. We have questions placed in front of us. We will be pulling them out one by one and answer those very popular and very interesting ones. So I'll start. Question number one. How much time do you actually need to invest to make your investment work? Well, it is a very broad question to ask. If you have a little money to invest and you're ready to pull the trigger, it's better to start exploring your possibilities in multi-unit investment properties, such as, let's per se, 3-unit building, 2-unit building, calculate the income, collected income, calculate the expenses, and then after that, see what the price is and what is the return on your money. And if you see that the return on your money is about 10% or more, it means that you have a good deal. That is a well worth it investment in the real estate, and you should go for it. But of course, remember, always consult with your real estate broker or with a real estate professional or the real estate investor who would know all the details about investment buying and then possibly reselling that property. What you want to pay attention on is a possibility of exit strategy also when you invest. Nazariy, go right ahead.
Yeah, I think it's also very important to look at the market conditions too, and depending on what amount of money do you have to invest, then kind of have a strong plan. Because let's say if you're in an environment of high interest rates and you calculate your cap rate and return on investment, and let's say the interest rate is about 7.5%, you at least have to make that after all of the other expenses to break even and not lose money. So I think if you run a comparison between stocks and real estate, and again, I'm not a financial expert or licensed expert, so everything that I say is just my opinion and my experience. Don't take it as an advice. Just always consult with somebody that's licensed. So if you talk about multifamily, perhaps the barrier to entry is a bit more high when compared to stocks, because with stocks, let's say if you have $50,000, you can invest in different products that's out there. Could be just regular stocks, or it could be ETFs, or it could be bonds, which, depending on which one you choose, have different, I would say, like industry standard strategies that work. Where for real estate, especially multi-unit real estate, you technically buy a larger asset with with um, with a down payment, that you basically control a larger asset, but you also have a bigger risk in case um, the math doesn't work out, and for example, expenses outweigh the income. Um, so you really have to have a strong due diligence and have a strong plan in deciding which one works for you.
Absolutely, absolutely. This is your turn now to choose the question.
Okay, I'll go with this one. Can you do both successfully? Um, I'll go probably. So you can probably do both successfully, although there's no like way to know which one's going to work better for you without trying each, I guess, because there's a lot of misconceptions also, that it could be just very easy to manage a property, or it could be very easy to make money in real estate, which both I would say to some extent are true or not. Um, but short answer is yes, you can probably do both successfully if you have a plan, and if you have like a risk acceptance that you psychologically have as well. Um, for example, if the stock that you bought is going down, um, and you have a target price, and you're willing to lose, I don't know, 20% of the investment, and then you exit, then it's a strategy. If you don't have that and you can't really like tolerate the money that you invest and then you lose, then you probably are not ready yet to invest in markets.
Absolutely. So I would say, and I share your opinion, of course, I would say that get your foot in the game, get your foot in the door, start doing it, but get prepared for both. If you want to invest in real estate first, then gather the information, get advice from your real estate professional, ask what would be good, but start small. And of course, timing is very important because depends on the economy, depends on the pricing. We all have experienced highs and downs in the real estate market, so it's better, of course, to buy when the prices are lower and calculate what is the return on your money. I've heard that stocks is almost the same game. If something is going on with the economy, in the political system of the country, or in general, globally, it means that consumer confidence is not that high. The stocks or stock market is jumping up and down. And then if you do have experience, buy and sell, maybe you will make money. But also, talk to the professional, talk to the licensed advisor, see how it's going to work. Start small. Do you think that?
Invest which you can lose, basically, which you're not going to regret if you're going to lose that. If we talk about stock market, like real estate is a bit different because you leverage pretty much. You put some down payment unless you put everything cash and buy the property and own it out front. But other than that, you put a small chunk of money as a down payment, and then you control a larger asset. Where in real estate it works a little bit differently, although you can also have a leverage. Basically, you just borrow the money and trade with the borrowed money, which has even stronger risk. So I I think it's also start small, and also if you don't have a lot of money to start up front, and that's like how I started. The first townhome I bought was in Palatine. It was 2018, I think. I think interest rates were back then were like 4.75%.
Great interest rates.
That's when I refinanced, and I think I bought it for 5.1 or something like that. And if you don't have a lot of money, just put whatever minimum is there, and then try to look for an opportunity to add value. And that could be just like cosmetics, which doesn't add a lot of value, but also, well, it adds a little bit of value, but not dramatically. Like if you would add like a bedroom or or a bathroom, something like that. And just try to do some stuff by yourself if you're like a little bit savvy. If not, then probably just factor in the cost of using somebody else, like a
Absolutely.
contractor.
As I said, start small, feel how it goes, and then see what the hiccups are. And then have in the back of your mind, always have that exit strategy. Think about it. And if something goes not the way you want it, that to go, then think of the plan B.
Sure.
Next question. Which one is better in a recession? Well, recession is a state of the economy where everything is low. So usually, when the recession happens, it's good to buy. It's good to buy because prices are low. People don't have that much of cash, or maybe people try to keep it with the uncertainty of not knowing what's going to happen next. So savvy investors in real estate usually buy at that time and keep until the economy builds up, goes up, and then you can sell or you can still keep it. Depends on the numbers. It's good to move your funds around, and if you bought cheap, you can sell for more, get more money, building your wealth, building another better property, better profitable project, and play with that. What do you think?
Yeah. What was the question again? I just want to read.
Which one is better in the recession? Yes, stock or real estate?
Yeah, I think there's also like not right or wrong question to like one is better or one is worse, because like during a recession, typically like stock market investors, they tend to buy different products than like stocks of the company or shares. And those could be bonds or sometimes some index funds. And a bond is basically a loan that you give to a company in exchange for an interest. So basically, it's for them, it's an obligation to pay you back. It's some sort of a loan that you loan out to the company.
When is better to buy bond? In
recession.
In recession?
Or it really depends, I guess, also on your age and your risk tolerance. So bonds, they tend to be less risky, but they also have lower rate of return, or they increase in price not that drastically as a stock. Because in a stock, basically you invest in an possibility that the company is going to do well and is going to produce great services for people, and that's how they're going to create money.
The value of the stock would grow, right?
And then the value.
Yes, that's what we hope for.
Right. So I think in recession, it could also be a mix. That's probably what I would do. You just, roll your money into something that's more stable, like bonds. But real estate is, if you're prepared to it, I think it's a little bit more stable, although it loses some value. But if you're not leveraged, for example, if you don't have, I don't know, like a second mortgage on that property, or thinking of like any other risks that could be there with the property, you don't really like Warren Buffett says, if you buy a farm and like if the economy goes like south or there's something going on, you don't just sell the farm because you grow the produce and you live off of it. So it's the same thing with the property. If the property like cash flowing positively, even in a recession, it provides you a steady income. Where stocks could just, they volatile, they go up and down pretty much 24/7 with global markets now. So I guess you gotta choose your tolerance here. But I would probably do both. Like in a recession, if you're prepared, do not sell, because you can probably get something else in terms of real estate property with a bigger discount. With stocks is the same thing. If it's a recession, you can get pretty much good quality companies at a discount.
So during the recession, your advice is don't sell, just buy.
Just don't sell.
Don't
Yeah,
sell.
and don't be
Just buy.
leveraged. So always kind of like rebalance the portfolio, or be informed what's going on. Read the news. Kind of be a curious guy.
Educate yourself.
Yes.
Yeah. And go to the professionals, right?
Correct.
They can advise.
Correct. With real estate, that's 100% true. Same thing with stocks.
Yeah.
You always want to consult with somebody. Take second opinion in some cases. Always have your opinion too, and just be educated and invest, because time flies, and this both real estate and stocks are not a quick get rich kind of a thing. It's
a process.
It's a process, because there's different applications also if you buy and sell quickly, both in stock markets and real estate. There's different cap rates and tax brackets, where if you're there for long term, there's strategies to maximize your profits and be left with more money than
Don't forget, talk to a professional.
Sure.
Right? Yeah. Nazariy, it's your turn.
Okay. Can you lose everything? You want to go, or?
No, go ahead.
The answer is yes. And again, I mentioned a little bit about if you're leveraged. For example, if you borrow the money to trade, you can lose everything and just even owe more than you had in the beginning. With real estate, I think during like recessions, it's more stable. Although it's the same thing. If you don't have a strategy, like real estate works a little bit differently, because you could have like a micro climate within the same, for example, county or a city, where prices differ drastically from one and another. So you really have to look at locations, because that's probably going to be your strongest hedge against the
Absolutely. Markets could be separated one from another, even if they are located close to one to another. And of course, it depends on what that town or county lives off. For example, if there is a factory in one, it means that it will be much more stable than in another one. You would have only services. Those services could go up and down, or demand for services, and people's income could go down, meaning that they could not keep their properties. Also, they would like to sell. The properties would go on the market, and the prices, of course, the demand wouldn't be there. And that's where you beginning to lose, versus the other one, which is more stable because of the working factory in it. What about stocks?
Well, it's 100% true that a stock can go to zero if I don't know, the company goes bankrupt, or there's a fraud or something else. So like they're more risky than a real estate, because real estate is like, it's always there. You see it, you can touch it, you can.
Thank you.
People have people always gonna have a need to live somewhere, and you can like do a value add. You can do a bunch of different things with real estate, although it requires a higher barrier to entry. With stocks, you can lose everything, absolutely. You can go to zero, but at the same time, if you have a strategy, if you do research, you can buy index funds, and those typically do not. If a company out of that index fund would go to zero or vanish, it would be long before they actually remove that company out of that index fund. So on average, it's still stable. So like stocks, if you buy an index, like S&P 500 is basically a collection of the strongest 500 companies that are in US. Typically the return is about 8% a year, combined with the dividends and the growth.
That's when everything is good, right?
Right, but that's over a longer time, so like
right.
10 years and plus. So that's your average out.
So, for example, you have stocks, you have invested money in the money market, and all of a sudden we experience in the recession. you don't do anything, right? You just sit tight and wait till better times.
True.
Correct?
Or if you have some sum of cash, you can, depending again on the market and your research, like if you like the company, like if you believe in it, what it does, I tend to just buy a little bit more during the downturn. But also it depends like on your strategy. If you have like short-term plans, selling, like getting in the beginning of the year, or like beginning of a presidency or a new cabinet, and then you like sell out of it in like 3 years or something. It's also a short-term strategy.
So, yeah.
Um, but yeah, typically it's good to have a plan. It's good to have a diversification, and
In real estate, when the economy goes down for some reason, and you have investment properties, and if they are not producing, then most likely you are about to lose them. So make sure that in real estate, if you invest in the producing money making cash flow property, it has to be occupied all the time. It has to be maintained in a proper manner. Otherwise, if something goes wrong, that will incur more expenses from out of pocket. And when times are shaky, that's when you tend to lose it. So keep your properties up, sit tight when the economy is down. And when it's up, then you make your next decision. My turn. What's the biggest myth people believe about each? Well, I would say that lots of people say that investing in real estate is easy and it's 1, 2, 3, and anyone can do it. And as I always mention, because I have strong experience in managing properties, developing properties, and consulting the investors for the real estate, I know that it takes time and it takes experience and it takes knowledge how to deal with properties in general, investment properties. And if you have tenants, if you have expenses, if you have to maintain properties, you do have to have someone helping you. If you think that you can do it yourself, you might, but if it's one property, it's still okay. If it's two properties, you might be able to do it. But if it's more, I don't think you're efficient enough to get that done without the professional help. So look at that very carefully. Calculate your abilities, calculate your knowledge, and again, consult with a professional. You will see where you stand at that point. What about stocks? What do you think? What's the biggest myth?
Yeah, I guess that the biggest myth that like stocks always go up, which is not true, because they can go down, and when they go down, they usually go down faster than they go up, like at the bigger rate. And we probably saw it in the beginning of the year that, S&P kind of like was in correction territory. So it lost more than like 10% of its value. So I think that's the biggest myth, that like you pick any company, especially like people when they start, and let's say they don't start with a lot of money, and they have like, let's say, $100 or $500 or 1,000, and they tend to go into like penny stocks, and those usually just don't go up or disappear within a few years. There's different also myths with crypto, and it's been a ride. People made a bunch of money as well, but it's even more volatile than stock markets. So I think that's the biggest risk, that like you invest in stock, you forget about it, which could be true if you probably use a minimal risk strategy, like investing in index funds or bonds. But if you want to maximize your return, you probably need a little bit more time to manage. So you have to be more involved, I guess. So
Meaning wait, right?
Wait or be more involved, like rebalancing. Sometimes you could get out of the company if in 3 years, for example, they're
So
not really
don't
producers.
invest in one company. Invest in
Yeah, that's the safest, I would say, in this. Invest in a collection. So like ETFs, it's I think it stands for exchange traded fund. Um, it's a collection of different companies that could be in different sectors of the market. So you could be in tech, or for example, services or pharmaceutical, and it's a collection of those in one index fund. I also would say that real estate. Why I like real estate, because it can be kind of considered like a hedge against inflation, because typically it tends to increase in value even if you don't do anything, I would say. But also the biggest myth with real estate is like people think that you don't do anything and it requires maintenance. If you don't maintain your property, it's going to be harder to sell. It's just going to create problems, and like all of the profits that you take or bring after renting that out, it can be just eaten by maintenances. So like make sure
absolutely
the HVAC
Absolutely.
works, everything. Like
Absolutely. Whose turn is now?
I think it's mine.
Yes, go ahead.
Which investment type feels safer? I think I kind of mentioned that a little bit. So real estate kind of like feels safer because you can feel and touch it and see it. Where, for example, like I bring this example that some people buy gold, or like they buy a share of a company that like invests in gold, but you don't really like own the gold because you don't have it, you don't see it. So on the other hand, you buy a piece of property and you see it every day, you can drive by it, you can check on it. So I think that feels safer from one extent.
What about buying stocks of the companies which have been around for hundreds of years and they are very stable? The growth is slow, but it is very very assuring. Do you think that is safe?
I think it depends. If I look at companies like that, I usually choose companies that pay dividend, and you got to look at like the history, because a company could be around for 100 years, but then could be destroyed by like progress or something else. So if like everybody's talking about Coca-Cola or somebody else like Procter and Gamble, and those been around since probably, I don't know, 19th century, if not earlier. Those are pretty safe, but you also you got to look at if it's strong balance sheet, if it's they can continuously grow their earnings and they grow their dividend payout, then yes, it's safer. Then that's something that I would buy because it's predictable. If that's what I'm trying to say.
Predictability.
Yeah.
Yes.
If you look at like past 5 years and they've been growing 5% each quarter, then probably they're going to continue to grow.
The probability of the growth is there just because looking at the previous history.
Same with people.
Absolutely. Well, in real estate, also in the long run, the history shows that it grows. Real estate grows in value, no matter what. Even if we have the market crash, then sooner or later it will catch up. And if you invest in real estate for a long run, it means that you're going to benefit from that. If you are the investor where you want a quick return, then it's, of course, it's risky. It's risky. It's not safe. You might jump into something which you cannot handle. Also, that has to be high interest rates can be a factor of the loss. Market crash, economy down in anything can affect. But in the long run, it's safe. It's safe. Who's next?
I think it's you. Yeah.
Have you ever lost money doing it? Well, I can tell you, I lost a lot, almost everything. During the market crash and economy went down 2007, 2008, I lost everything. And analyzing right now why it happened to me, of course, the economy was the main factor. But I did not invest wisely. All my money was invested in new construction, real estate, and we could not sell at the end of the day. And all of a sudden, the possibility of selling disappeared. Market stopped completely, and then everything had to go. That's the biggest problem. If I had invested in real estate, which would make money at the same time, new construction would probably go, but those properties which were producing could have covered my losses there, and on the other end, and that probably would save me. However, unfortunately, I did not do that. And the appetite for quick return, for bigger earnings, overpowered me. And I invested in one basket, which everyone will tell you not to. So that's how it happened.
Lessons learned.
Lesson learned.
But also no one, well, some people have predicted it. I was probably what, like 13 or 14 years old at that time and didn't know anything about, real estate. And I was in eighth grade anyway. So like people kind of like see that they say that they saw it coming, but really you can't really predict what's going to happen. So probably that's one of the lessons learned. Diversification is the key. I personally, like, or people my age, we never lived through a huge crash, except maybe like pandemic. That was like some sort of a crash. Stocks and everything kind of like went down because the economy kind of stopped. But then it quickly recovered due to stimulus and like different techniques that the government did. And I think a lot of it also that 2008 financial market have brought a lot of these lessons learned to the government. So now the underwriting process and everything else is a lot more stricter to limit a possibility of a wide market crash. So maybe that's why, like, in the last 10 years or plus, we have not seen a huge market crash. But I did lose a little bit of money in stock market when I was trying out, and again, not knowing that you got to look at like balance sheet and like how long the company was in the market, what services and products they produce, what potential they have. And I think I lost a little bit of money by playing with leverage and option trading, which is a little bit more complex, but it could be also interesting. It's like a big casino, and if you know what you're doing, you can make huge money. It's a huge leverage, but you also can lose them in a matter of seconds. So just be careful. But there's always a possibility to make money or lose money. And as my old boss said, like, there's always food on the table. You just got to know how to find it and how to look for it.
Absolutely. Go ahead.
Okay. If you only pick one for the rest of your life, which would it be? I don't know. Real estate, kind of like, unless you structure it that way that you don't spend much money besides just like looking at numbers, then yes, I probably would pick real estate, because in addition to market appreciation, you have a predictable cash flow. But that requires a huge chunk of money. So like, you need millions of dollars to to structure that way that you're not involved on day-to-day operation, for example.
I agree.
Where with stocks, for example, there's also products called REITs. It stands for Real Estate Investment Trusts, and it's basically a share of a company that buys real estate and manages real estate, and basically is in real estate business or sector. And it could be in mortgage business, so they create mortgages.
So you invest in through a third party, right?
Yes.
Someone manages your money,
Right.
your assets by investing in real estate. You don't do it direct.
Correct. So
No,
it's a form of stock product, but called REIT.
Is it considered to be safe?
Not really. It's also
really.
very connected to economy. If if real estate economy goes down, for example, no one's buying or nothing's selling, then they typically go down versus like index funds or ETFs.
Yeah, I hear you. I would stick to real estate also. Multi-unit buildings with quality tenants, professionally managed, with positive cash flow. That is going to keep your money, make your money, grow your money for in the long run, in the short run. So I would stick to real estate.
Awesome.
If you had 200K cash right now, what would you do with it? Well, interesting. Me as a real estate broker and real estate investor and real estate developer, I would definitely look into the opportunity to invest in real estate. 200K cash would give me a possibility to put good down payment for multi-unit building, calculate the expenses, calculate the actual rents, see that expenses really tracked well before you go and buy that property, and of course the condition. If the property needs lots of work, it could be very expensive and very draining. If you don't have an experience in that, don't go into projects like that. Buy just good cash flow producing property. If you do have a background in rehab and properties, you can do that also. But just look at the numbers. Math tells you everything.
But I also wanted to add that, if you're already thinking of, putting $200,000 in something, then if it's your first time doing something like that, then definitely don't do it on your own. Like, come to
Absolutely.
To a realtor or a management company that help you crunch the numbers, because multi-unit real estate investment is more complex than single family investment, because they even value the property way differently than residential or like duplexes. So that's one
Correct.
thing. Also, again, because it's a bigger risk, right? You put $200,000 on something that can be worth $1 million plus. So that really has to play out. The numbers have to work. But I would definitely also look into something tangible like real estate. It could be multi-unit or maybe a commercial space.
Commercial real estate also. Yeah. To consider.
Because stocks, like, you buy $200,000 worth of stocks, you're not going to make a lot of money. You're probably going to make, I don't know, depending on which, if you buy S&P 500, I don't remember what the yield is, but it's probably less than 1% dividend, plus the growth is another 4-6% on average. So that, with real estate, you can own the property or something that's valued at $1 million plus, and plus you have a cash flow in addition to the appreciation. It can bring a lot more money.
Think about your portfolio, right? Portfolio. Buy one, then go to the next one, then go to the next one. Talk to the financial professional. See how you can refinance, pull out the money from equity from one, reinvest, and use 1031 exchange, and on and on and on. The possibilities are endless. Just work with the right people, with the right advisors. Come to us.
Yeah, and don't wait.
And don't wait. That's
the time
right.
is now.
Right, the time is now. Here you go. That's the last one.
Okay. Which type of investment builds wealth faster? Um, I don't know. It's also, there's no right or wrong question, because if you happen to like invest in Uber when it started and you held it for like 5 years, you could, be thousands of percent of return. But if you're like an average person, you never know like what's gonna explode or not. Um, I think, and also if you don't do it full time, and for example, you're like someone like me that has a steady career, like a predictable income, uh, then real estate would be a little bit, well, it's also like if you like, um, that's my personal opinion. Like if you like managing the tenants, for example, talking to them, fixing something by yourself, and you have a very low barrier to entry with your first investment property, then I would probably say like try real estate, because if you set it right, you can set it and forget it. With stocks, it's not going to give you that much of a cash flow, but there's a possibility that the stock is going to increase in value, and you basically do zero management, except like if you use a brokerage that charges some fee for managing your money, which is like another topic that they can like eat into your potential to earn. Um, but I think, if you're somebody that likes the moving parts and be involved all the time, not sit in one place, I say real estate is more interesting, because you go to Home Depot, you buy different parts, you buy different like light fixtures, you make a decision how it's going to look like, and you're basically preparing the property to then be sold for more money in future.
And you're learning, right?
Yeah,
And you're learning how to improve, what sells, uh, what's the better area to invest in. You look into the growth or possible future growth for the areas. You research the upcoming areas also, and then you consult with a professional, and then you make your decision and you invest. And you might be able to make very quickly big chunk of money. Sometimes you can wait, or you will have to wait in order to to produce wealth, to generate wealth. But it's all about doing it. Start doing it. Start learning. If you're new in that, if you already have experience, continue learning. Continue working with the professionals. They will lead you through the process. They will direct you in the right way, and that's what helps. That's what helps.
True. Just start acting, because nothing's gonna happen by on its own. Like it can happen on its own, but you have the power to swim and direct.
Right, navigate, navigate through it. At the end of the day, it's not about only stocks or real estate, right? It's about doing it. Learn how to do that. Learn how to invest smart, and yeah, you will be happy and successful. Well, at this point, we will end our podcast. Nazariy, pleasure having you over here. We will be talking more about investing, so don't forget to follow us.
Thank you so much. Pleasure.
Thank you.
Thank you.